Good morning, everybody. JD here with your Money Fortress pregame market report. Today is Wednesday, December 11th. Yesterday in the Money Fortress, we executed I guess, just what I would call a very normal, very healthy type of trade, buying the IWM. That small cap stock index did rally in the morning, and we were able to exit for a 36 basis point gain. Although the timing of that exit, and this is a good reminder, folks, that we are not market timers here per se. We are surfers riding a wave. We get off the wave at times, maybe before the wave dissipates at the shore. So yesterday there was more meat on the bone, but boy, one never does know, as was the case on Tuesday when we got whacked by the China announcement that they were going to go after Nvidia for antitrust potential violations. And so getting sideswiped is part of the risk of intraday trading. It doesn't appear very often, but it does appear. So I'm very content locking in gains when we have them at a time when you don't know exactly what's going to be coming your way um, later in the trading day. And you can see that the IWM, well, I don't have the chart up here. I've got the VIXI up, but I'm sorry, the IWM actually sold off late in the day yesterday. So we actually did very well to lock in a nice gain, and we move on to today, where we have the all-important CPI report and a very irrational market reaction that appears to be tied to very much correlated to the expectation that the Federal Reserve is going to cut rates by 25 basis points. Never mind the fact that they probably shouldn't be cutting rates. They don't need to cut rates at this moment. GDP now came in yesterday again at the 3.3% level for the fourth quarter. And the inflation report today showed strength again in housing, meaning higher prices in housing and rents. So that component of the CPI remains very, very sticky, very problematic for the Federal Reserve in terms of its attempt to lower inflation down to 2%. I guess the market's reacting to the fact that the numbers were in line with expectations. And so, but in line with expectations did nothing to make a dent in getting us closer to that 2%. And so futures spiked. The 10-year yield is higher. The 2-year yield is lower, which I think is I always turn to the bond market for a more sane reaction to what's happening. And what you have here is the you have the economy showing strength, and that is basically giving us a upward sloping yield curve, and that upward sloping yield curve, and pushing the 2-year rate down because the Federal Reserve is going to cut interest rates and may continue cutting interest rates for all we know. Uh, we don't know until we know when the December meeting comes, and we'll get an update to the dot plot with that meeting, and that should give us some insight into what's going to happen in 2025. But here in the Money Fortress, we're just focused on today and where we're going to find arbitrage. And frankly, my expectation is for this higher open. The Russell 2000 in particular is showing the most strength today, with the NASDAQ closely behind. I think those gains are going to be tempered during the day. Volatility had been up above 14 with the collapse in the market late in the day. We actually got, I believe, and let me just pull it up real quick here. The VIX yesterday closed at 14 and change. So yeah, we were above 14. and that looks like it's drifting lower thanks to that CPI report. The VIXI is following suit, and that's where we're going to find our arbitrage. In fact, the VIXI is down well, looks like just about 2% in pre-market trading, although that's bouncing around quite a bit. So we'll wait and see what happens at the market open. But my intention is to get us into the VIXI shortly after the market opens. You need to follow me in the Discord to get the exact timing instructions. The entry, the exit is all going to be in the Discord. But I'm going to buy the VIXI. I'm going to look for anywhere between 25 and 50 basis points today and call it a day. Again, the market reaction to the CPI report doesn't make a whole heck of a lot of sense. So I do expect markets to drift lower as especially the reality of that higher 10-year yield, I guess, dawns on folks that that might be problematic if you are a long-term investor. So that's all I have for today, folks. Again, check the Discord for specific entry and exit instructions. This is JD. As always, I'll be back tomorrow to review today's trade and bring you the next arbitrage opportunity here in the Money Fortress. Take care, everybody. Have a great day.